The U.S. real estate market is well-studied and extremely transparent. All the necessary information for making investment decisions is publicly available: where and what is being sold, who is buying and how. We have studied for you the reports of American analysts and are sharing our conclusions. Debt houses. Any investor is interested in purchasing high-quality real estate at a favorable price, or even better, below market value. In the U.S., offers with deep discounts most often appear on mortgaged houses. The owners owe large sums to banks, so they are losing their real estate. But potential buyers get a chance to make a good deal. Research debt properties if you want to find a real bargain. There are also interesting offers from regular sellers. Moreover, last year they were much more willing to make concessions than in 2022. This includes reducing the original price and accepting an offer lower than the asking price. 15.7% of sellers, 4 times more than in the same period in 2022, in addition to the reduced price, made additional concessions to the buyer. So bargain anyway. More precisely, entrust this to your realtor. In the USA, all negotiations are conducted through brokers. Lower price segment. According to Redfin data for the fourth quarter of 2023, the total share of real estate purchased by investors continues to fall, although at a slower rate than a year earlier. But among all completed transactions, 46.5% were for the purchase of inexpensive properties. For the middle price category, 24.6%, for the high price category, 28.8%. In the low price segment, competition is strongest. Buyers have to fight for real estate. Many foreigners consider only premium options in the United States. According to Prian statistics, the average price of a property that foreign buyers are interested in exceeds $500,000. However, local investors are more often hunting for economy-class real estate. Ask agents to show you these options as well. Supply shortage. As of December 2023, the total supply of homes for sale in the United States fell by 5.1% year-over-year. And it remains noticeably below pre-pandemic levels. Although, contrary to the general trend, in some states the number of proposals has increased. The most impressive growth was shown by such large cities as New Orleans in Louisiana, plus 39.6%, San Antonio in Texas, plus 34.5%, and Memphis in Tennessee, plus 33.2%. To get a better price, go to the market in regions where the supply shortage is more modest. Conversely, look to locations with a greater shortage of homes for sale to see greater capital gains in the long run. Single-family homes. Single-family homes accounted for 68.6% of all transactions completed by investors in the fourth quarter of 2023. Townhouses take third place with a modest 7.1%, followed by condominiums with 19.2%. The choice of investors is justified. About 44 million people in the United States rent single-family homes. At the same time, rental rates are steadily increasing. From 2020 to 2023, the national average to rent a single-family home became 24% more expensive. If there is a shortage of supply, the selling price at least does not fall. Judging by construction trends, America will remain one story. More than 73% of new buildings in 2023 are single-family homes, which is 8% more than the same period in 2022. Sunny cities. About 25% of average home buyers in the United States last year wanted to move to regions with a more pleasant climate. The most popular were Las Vegas in Nevada, Miami in Florida, and Sacramento in California. If the trend continues, investing in local housing is a promising business. The main thing is not to forget that internal migrants are trying to find more profitable options. Therefore, pay attention to real estate in the middle and lower price segment. New buildings. As of November 2023, 1.41 million new single-family homes were built in the United States. A year earlier, the figure was at 1.55 million. The slowdown is due to the fact that developers simply could not sell everything. Rising mortgage rates have driven many buyers out of the market. Now developers are trying to sell off accumulated inventory, attracting clients with bonuses, money to cover closing costs, various gift cards, and even free cars. So think about new buildings. True, in some areas the supply shortage is so strong that you will have to compete for an interesting property. You can't count on discounts and bonuses everywhere. Tax rates. Any owner of real estate in the United States is required to pay a property tax once a year, which averages 1 to 2% of the value of the property. However, rates vary greatly in different areas. For example, the lowest taxes are in the states of Hawaii, 0.315%, Alabama, 0.411%, Colorado, 0.546%. In beloved Florida, the property tax is 0.862%. This means that the owner of an average home worth $250,000 will pay about $2,200 per year. In California, rates are slightly lower at 0.747%, but due to the high cost of objects, $573,000, the average payment exceeds $4,000 per year. In New York, which many foreigners are interested in, the rate is 1.728%. This means that for a typical object worth $340,000, you will have to pay the state $5,900 per year. The advice here is simple. If you want to reduce your expenses, choose investment properties in states with lower tax rates.